Once again, on behalf of Trinity Finvest, I warmly welcome all of you. Thank you all for taking out your valuable time, and we truly appreciate your presence and participation. So let's get started. So today's session is exclusively designed for NRIs by Trinity Finvest, and we have two distinguished speakers with us today. And it is my privilege to introduce. Can you move to the next slide, sir? Yeah. It is a privilege to introduce our founder and CEO, Mr. Gibi George. He brings with him over 25 years of rich banking experience. He has served as a former zonal head of ICICI Bank and has also worked with reputed institutions such as American Express, Centrum Finance, and Transcorp International. Also qualified with PGDM from IIM Kozhikode. Now, let me introduce our second speaker to you, Mr. Vijaykumar. He is the regional head of in Kerala at ICICI Prudential Asset Management Company. He has been with this organization for more than 4 years and over 15 years of experience in wealth management and asset management field. He has also worked with few well-known leading companies and is also an expert speaker and panelist in forums such as Malayalam Manorama, investment programs, and Dhanam Summit. So it is a great privilege to have you here with us as a speaker, sir. Apart from webinars like today, we regularly conduct financial awareness programs for schools, colleges, and various associations. So all these initiatives, it comes under our financial inclusion and sustainable financial early education. As you can see, these are just a few glimpses of what we have conducted. Now let's take a quick look at the topics we will be covering today. So, NRI investment opportunities and its pitfall. How the India's growth story is going to benefit us. How the wealth creation strategies and what are the gift options we have. Risk mitigations and wealth preservation. The retirement planning, fraud prevention, tax efficiency, and tax prudence. So all this will be taken to you all through in a detail. And now I would like to invite Mr. Gibi George to take over and continue with the session.
Yeah, thank you, Aina. I hope I'm audible.
Yes, sir, you are audible.
Right. So, first of all, once again, a very warm welcome to all of you joining us today. It is a Saturday evening and pretty boring to attend any of the webinar. And also, we later realized that today is, of course, Ramadan fast breaking, which is thereby so many of our people who have registered for participation couldn't join, so they've asked for recorded session, etc. So I think within all the constraints on a weekend to join at 7 o'clock evening for a webinar, for me personally difficult, but I appreciate each one of you for taking out time and joining. And I can assure you that we will not disappoint you with the kind of whatever we put across for the next 1 hour. My also request to all the participants, wherever you have specific questions, do put it in the chat, because we have a limitation in opening up the mic for everyone to speak. But please put it in the chat. Our team will capture those and will answer those at the end of the session as much as possible. Wherever it is pending, we will get back to them one-to-one as well. So we'll keep it going. നമുക്കെല്ലാം അറിയാവുന്നതുപോലെ NRIs are always the privileged, all the people who work hard outside the country, earn us a lot of foreign currency, and ensure that the country's sustainability is maintained. So, for example, when you look at it from a Kerala perspective, the lot of money comes from each one of you. That is why the state comes in the top 1 or top 2 position when it comes to per capita income. So there is today morning I was just taking another session where you can see that India ranks number 1 with $161 billion remittance from NRI community every year. And the nearest one comes as 1/4 of this 161 billion, which is, I believe, Mexico. So India is the biggest beneficiary of people like you working outside, having a better earning outside, and also sending to the country for various purposes. So always this NRI investments in India has people have different lookouts or opportunity. There is one, something is opportunity, something is limitation. So let's look at it, the opportunity and limitation. So real estate, when it comes to, yeah, by law you're not permitted to buy agricultural land, farmhouse, etc., but you're free to buy residential and commercial properties. Banking, you are not supposed to hold a resident bank account, but you can open NRE, NRO, FCNR accounts freely. When it comes to equities or stock investments, you are only permitted to come into India to buy stocks directly through the PINS account, right? An NRO non-PINS account. So it is designated NRI demat accounts. And long-term equity like mutual fund, alternative and all, free to invest in with a complete repatriation. എന്ന് വെച്ചാൽ പൈസ തിരിച്ചു കൊണ്ടുപോകാനായിട്ടൊരു ബുദ്ധിമുട്ടും NRIസിന് ഇല്ല. വളരെ ഫേവറബിൾ ആയിട്ടാണ് those laws are permitting. Mutual funds, barring US and Canada NRIs, almost all other countries, there is no restriction to invest into any mutual fund scheme, any PMS scheme, any AIF schemes, etc. So everything has been taken care. And US and Canada, yes, you can still invest, but in a designated certain accounts, certain schemes only. Savings account, you're not eligible for, remember this, PPF, NSC, Kisan Vikas Patra, etc. You're not permitted to invest, but you are definitely permitted to invest in NRIFDs, FCNR, other investments, etc. So, from a savings point, there are some areas where there is a limitation. Some areas you are freely entitled to go and invest in multiple places. There's no issue. Taxation, for NRO, there is a higher TDS on rent, FD income, property sale, etc. But you also have an opportunity of DTAA, double taxation avoidance, as per the double taxation avoidance agreement. And also you can hold, even once you come back to India and settle down, you have this RNOR status, which allows you to complete that NRA status for the next, 2-3 years after becoming a resident Indian. Global access, maybe this is one area I must tell you that Indians should explore more and more. Earlier, it used to have a very limited offshore option. Today, with the gift city, there are enormous tax efficient option to fully repatriate money and invest in India, take the benefit of Indian equities, Indian debt, Indian real estate, etc. So just put in some of the perspective. There are some areas where NRIs have a limitation, but most of the areas NRI have a privilege of opening different account, opening through gift city, investing in Indian equity, Indian other debt and other schemes, and also having a long-term commercial or residential interest in India, while some limitations, like we mentioned, are applicable too. Let's keep moving. We all have heard enough that India growth story. So somewhere we all say that this is the fastest growing economy in the world. So we will have to also look at it, how it is benefiting you and me. നമുക്ക് പറയുമ്പോൾ ഇങ്ങനെ ആളുകൾ പറയും ഇതെല്ലാം ഹൈപ്ഡ് ആണോ, ഇതെല്ലാം റിയൽ ആണോ എന്നൊക്കെ നമ്മളോട് ചോദിക്കാറുണ്ട്. So we are looking at some of these things in our subsequent slide. So meanwhile, if anybody is non-Keralite who doesn't understand Malayalam, please type it so that I will avoid even Malayalam to that extent. Otherwise, I'll mix it both the language and we can understand it in a far better way. So what India has done, this is the top 10 economies of different decades. So in 1980s, if you look at it, starting the number one is United States, then as well as now. And barring 2030, we don't know, but that is something which is our estimate. So 1980s, if you look at that decade, United States, Japan, Germany. So India was never in the picture. China first time came into the top 10 economy only in 1980. Come 1990, China maintained it. Still, we didn't see India there. But the top orders, you look at it, United States, Japan, Germany, France, all that order remained unchanged. And look at 2000, year, the decade of 2000, where you saw China moving maybe top six position, where United States, Japan, Germany, everybody remained there. And remember, in 2000 decade also, India was never there in the picture. 2010 came, that decade, China moved up to top two position from sixth, and India first time coming to the top 10 economies of the world in 2010. And 2020, India moved up to sixth. And currently, any guess where India is currently, in which position? Any guesses?
In position 4?
Yeah, rightly answered. Yeah. So position four by overtaking United Kingdom and Germany. So and China remained there in top two. It is expectation, it is a projection that as at this growth level, India should come to the top three by 2030, where China is expected to be number one across the world, I mean in the world economic order, right? So the beauty is that India is following what China did it in 1980s and 90s. So the growth story is in terms of ranking, etc. It is moving up. Let's look at in real numbers. So this is a 24 number. It is even it continues to be similar way. India's GDP growth is one of the highest at around 6.8, right? Where you can see European Union, you can see the world at large is expected to grow at 3%. Even 2027 estimate also, which I was seeing it in the morning, it is coming to 3% world over. But India is expected to grow at 6.8% in a conservative estimate, and UK, US, all that would come much below. China could be a nearest competitor for us in terms of its, GDP growth. So we are representing a country where humongous amount of growth potential is there, and we are able to grow sustainably. Now, this is talking about 25 to 30, economic growth outlook, global economic growth outlook from 25 to 30. When you look at it, in the incremental growth of GDP, which is estimated, China is expected to have 23% market share, or rather, China will contribute 23% of GDP growth expected between 25 and 30, year 25 and 30, next 5 years. And who is the next? India, which will account 15% of GDP growth in the similar period, and US would come third at 11%. So time has come where incremental GDP growth in the world will be largely driven between China, India, and to great extent US. Yeah, this I'm sure as an NRI, this will give you so much of patriotism, rather nationalism or pride, saying that how my country back home is growing. Yeah. And India's credit outlook, India's sovereign outlook has also improved. First time in the last 18 years, it has been upgraded to triple B. And by major, even you can see subsequently, even short-term ratings have improved, even convertibility assessment has improved, and long-term rating has improved. So India's credit standing or sovereign standing is also improving among the world rating agencies or nations. So having said this, that India is growing, and where do you make money, or how do I make money? So there are multiple ways to make our prosperity done. So if you look at it, in the when we were looking at the first slide, I don't know whether you noticed, improving quality of life or improving prosperity of our families will come through our financial decision which we take. So in India, for all of you as NRIs, can have multiple options to make money, to participate in this great Indian story by direct stocks, mutual funds, investment advisory, portfolio management, alternative investment. There are multiple layer of investments available for one to benefit out of it. So today we have Vijay, who will take the entire detail, in next 10, 15 minutes or so. So AIF is a brilliant opportunity available. So this slide, the importance is not to solicit an investment, but to make you understand that there are so many options available in India to participate in the India growth story. So one obviously through the Indian equities, where you can come participate through the alternative investment form. That will be the most ideal one for NRIs, and give a time period of 3 to 5 years, and anywhere expect a return of I would say it's a moderate return. This is what you given is a higher return, maybe 13-15% annualized return is a possibility with certain amount of risk attributed to it. Private equity funds are available where people can invest into pre-IPO stage. There are funds allows you to with a higher rate of return, and of course the risk also will be much higher. So there are different investment vehicle available under private equity. There are performing credit funds where one want to avoid the equity participation, then they can come through the credit funds and real estate funds where they will invest into companies debt participation, loan participation, or even real estate project funding with a 12 to 15% INR return with moderately high risk. I would say that it is not as high as equity, but moderately it can be moderated. The risk can be moderately labeled as moderately high with performing credits and real estate fund. There are global equities where Indians like NRIs like you can participate through the gift city route or through the INR route and invest into countries like equities in China, Taiwan, America, and wherever there's an opportunity through different funds. Still, you can expect a return of 10 to 12% US dollar return with a risk classification as high, right? And there are also non-equity products available investing in a global market with a 7 to 8, 10% US dollar return. So while having said this, all investment decisions are subject to market risk, and we should be careful about entire scheme details before we take an investment decision. Like I mentioned, this is not an investment decision, but it is to make you understand that there are 5 or 6 ways you can participate in the India growth story as an NRI. And I must touch upon this Special Economic Zone or IFSC, International Financial Service Center, opened in Gift City, Gujarat, which allows you as an NRI to invest into India's different investment vehicle with the ease of doing business, or rather with it in its most tax efficient way, with a complete repatriation of money to your home country or the country where you want to country of origin where you want to transfer this money. So that as we all know, this should have been in elsewhere, but then with all the humility, or the center of power lies in Gujarat. This has gone to Ahmedabad, Gandhinagar. So Gujarat International Financial Tech City, that is where GIFT is expansion is. It is a special economic CES opened for financial services. There are multiple services. Out of one is definitely financial services. It's India's first international financial center where you can open even foreign currency bank account, foreign currency deposits, Indian equity investment, global investments, real estate, all that can be done with a favorable tax environment. This is more important. So even NRIs, foreign national, foreign institutions, all with certain eligibility criteria can come open investment there without having a bank account there, and you can have remittances back to the country of origin where you want to take the end use of the money without having the foreign exchange conversion. And there are 8 or 9 different currencies in which you are permitted to hold even bank account. So, like I mentioned, it has a tax advantage. It has a simplified operational compliance. It can have 8 or 9 different currencies in which you can transact, and it can be taken back to the country where you want to have the end use of the money. So, brilliant opportunity. And I am just concluding this investment portion that you can as a beginner or as a affluent or a high net worth or a family office in Ultra Chennai, you can have different investment vehicle to participate in the India growth story, which we mentioned earlier. So you as an NRI need to consult your investment advisor, consult your tax advisor, or rather banker, a wealth manager, to decide where, what type of investment to take part. Now, having created a lot of wealth, it is also important to de-risk ourselves from various exigencies or emergencies which we are subject to. So, like why we are saying so. When we started this, financial management services, I can tell you that there are many people whom first time we have created a life insurance in at the age of 50. We have created health insurance at the age of 50, 55. Right? There are people even at 60s first time we have created health insurance. So it is important that we de-risk ourselves from the uncertainties prevailing, which is haunting us daily. It can be a life threatening issues. So thereby a life insurance can save your family in protecting whatever the hard-earned money so far and what should have been your earnings if you were to be alive. So I'm requesting everyone have a clear risk management plan in place for you. So it can be your term insurance, or second, it can be your health insurance. Recently, I saw one funny statement written somewhere that NRIs are coming to India not looking out for their roots, but looking to do their root canal, which means the cost of treatment in abroad is so expensive. So this could be a country where you can come do your health treatments much cost effective way. So for that, what you would require is a health insurance proper covered policy. So probably you as an NRI should definitely look into this aspect as well. So a lot of advantage of lower premiums, family coverage, visit protection, tax benefit, renewal option. So there are, even there are policies allows you to do a 5-year payment and have a secure your policy for 5 years, right? So be it term insurance, be it health insurance, be it critical illness, etc. Please ensure that you back home have a sufficient policy in place so that your risk of created wealth should not be lost out in a hospital. We should ensure. I'm only giving an overview, and then I will hand over to Vijay for detailed update on for us in terms of India investment opportunity. The next one, which I want to give you a perspective on the banking sector and loans. So there are different loan structuring can be done. Interest. Recently, not a joke, and I'm telling you, there is a dignified person in our society where he had 29 different loans at a time. 29 different loans, including credit card outstanding at a time. So there you would require certain amount of banking advisory or loan advisory to structure it in a better way. Otherwise, I was just telling that banks would be praying for that customer with a 29 type of loan not to die at all anytime, so that the bank makes tons of money on this loan, which had and some of the interest rate. Just remember, 19% is what I could see as the highest one. There are loans with 19%. There are loans with the credit card outstanding, and there are loans at 14%, 15%, etc. So you would require possibly a good banking advisor to restructure if you are into that kind of a category. And moving on, retirement planning. And I'll just come in a minute why retirement planning is important. So at today's cost, if you have to plan your retirement after 10 year or 20 year, it would be 2 times cost. If it is you're planning to retire after 30 years, your cost could be as high as 8 times. So just see this block. At a 7% inflation rate, your cost of living can be, right, 2 times or 3 times when it comes to 15 years, 4 times when it comes to 20 years, and maybe 8 times when it comes to 30 years. So if you don't plan your retirement income, a regular retirement flow for rest of your life, right? I'm afraid that we can get into trouble later. So how to do that? There are many schemes in India available with regular income option, guaranteed lifelong income, and there are certain schemes allow you to beat inflation by investing wisely, like this mutual fund SWP program, systematic withdrawal plan, and some of it is very tax efficient too. So thereby, please go ahead, evaluate some of the investment retirement option like insurance retirement plan, national pension scheme, ULIPs, mutual fund SWP. I'm just citing some of it. With a different risk, different return expectation, different policy features, different tax efficiency, you may want to consider for your rest of the life if you're planning to come back and settling down back in India. Right? So it is important that you need to have a proper retirement plan once you come back and settle down in India. You also need to be bothered about tax efficiency. So everything in India is not a 30% tax bracket. There are products, there are investments which gives you zero taxation. There are investment with a 12.5 capital gain taxation. There are investment with 20%. There are investment with 30%. So having a proper advice on tax management helps you to manage the return of your hard-earned money in a most tax efficient way. I'm again repeating, with a tax consultant advice, right? You can definitely ensure that your income or your return of your hard-earned money or income generated out of your hard-earned money is managed in a most tax efficient way. I'll skip this one. We'll move into estate planning. Every NRI, majority of the NRIs forget to do this estate planning. What is estate planning? Whatever wealth you create, it need to get transmitted to the next generation very easily. For that, please create well wherever is required. Where you need to create, some of you have a business interest, create a business continuity plan, and wherever trust formation can help, please get into that so that you have a entire hard-earned money again. What I'm reiterating, that pass on to the next generation, your children, grandchildren, effortlessly. Right? So I'm also suggesting you, being a banker, I can vouch and tell you that what is the importance of nomination, what is the importance of updation of nomination. Sometimes we would have given nomination, but that if that is not reflecting in the bank's record or mutual fund or demat and insurance account, or even locker for that matter, right? Your yes, succeeding family will find it difficult to claim it. Will creation is the best way to do a proper succession in place for your family. Now this is a new entrant into all of this. Please match your bank records and bank accounts and so your titles in each of this and bank records in a similar fashion. If there is a mismatch, I can tell you that all the mutual fund companies, or be it bank deposits, or its landed property, all will find reasons, or rather, there would be regulatory formalities which need to be completed in case you are not existent. When your family or nominees comes to claim that amount, if there are indifferences in passport name and PAN name and the Aadhaar name and bank account name, etc., which is very common these days, we will find it very difficult to get the succession, get the money back to the investor. While investing, there may not be too much of objections, but while claiming, there could be multiple objections coming up. So this we have come out, and that is why we have included this in part of all our educational series, saying that ensure that our documents and our bank accounts, etc., having the similar names If there is a correction required, go to Akshaya centers, go to online, get your corrections done in records or in the bank or wherever it's applicable. And also, last but not the least, beware of frauds and fraudsters. All over the place, we can tell you that in the name of Ponzi schemes, in the name of penny stocks, in the name of cryptos and what do you call structured investments, exotic investments, there are always money traps behind you, right? I don't have to tell you that even our finance ministers AI videos are used also for propagating investments. There are so many fraudulent schemes floated in Kerala or anywhere in the world, and money has been taken off. There has been digital arrest and whatnot, and people are scared, put to scare and to swindle money, blackmail money. So beware of your hard-earned money. Don't get into any of the fraudulent schemes, etc. Wherever you are in doubt, people like us are always available and reach out to us. Last slides, common investment mistakes which generally NRIs, we have observed NRIs doing. It may not be your case specific. Over reliance on fixed deposit. While is it a mistake? Yeah, in a way it is a mistake because it doesn't beat the inflation. So relying only on bank deposits, it may be an inflation risk for you and a low return. Ignoring tax impact. So everywhere, every investment return is not tax free. So there are multiple what we call legal or FEMA laws or income tax laws are applicable. So you be careful about what kind of a law which which allows you to get tax exemption, where you need to pay, etc. One need to be careful about. NRI and NRO confusion. Still, there are people who maintain domestic account, but when it comes to some repatriation, etc., taking the money back, you will face the music. So keep your bank account in a very, very structured manner. Real estate buying, which is mentioned as emotional real estate buying. We're still hoping that real estate will not grow, the earth will not expand, all those, fancy ideas. But real estate has its own time to perform, to underperform. And also, there are a lot of liquidity and legal issues as well. So be careful about while investing into real estate. Many a times, assuming everything, like I mentioned, tax, no estate planning. So many NRIs still have to do their, nominations, will creation, etc. Maybe a good thing to consider for consolidated asset view. My request to all of you is that where your money is, your mind should be. So if you're investing somewhere or multiple places, at least once in 6 months, once in 3 months is what most ideal. You review your investment and see whether investments are yielding, not yielding, etc. And high return, don't chase. Only don't chase high return. Understand the risk associated with it and do a proper asset allocation, which is very key. And take always professional advice. Don't mind about majority of time who advises us, our peer group, അല്ലെങ്കിൽ our friend circle, or our church, or a social forum members. While it is good to take, but also to validate that information with a professional advice. So please ensure your investment, your financial management is done more efficiently. And we at Trinity practices some of the things. We are a one-stop financial shop with multiple businesses clubbed under one, and with a rich banking experience, best-in-class products, and technology available so that we can serve the clients across the globe. And we have a lifelong relationship concept with a periodic review of financial performance, which we do on a regular basis. And we practices for larger investment, businesses. One, under asset management, we have investment from fixed deposit to gift city, a variety of investment. We are here to distribute and reach out to you. Protection, we have a strong business model and a team, competent team to advise you on the protection. And we ensure that the designated NRI demat accounts are opened with us under our partner organization, and banking advisory, tax management. There are a host of things which we do. So we work on a phygital model. There is an RM and a digital support we extend. This is the way digital, Trinity has been favoring a large number of team, qualified bankers, finance professionals, etc., available at your disposal. And we work with some of the best brands like ICICI Prudential Asset Management. That is why Vijay is here to talk to all of you. And we are based in Kakinad, this Seaport Airport Road. And we are opening up more branches across Kerala. You will see us in major part of it. We being there in most part of Kerala. So I think it's a time to go for the next session. So if there is, I think we can. It's already 7:40. We need to complete Vijay's session also, and then open up for Q&A. There are a couple of questions already has come in the chat. Definitely, we will answer that once we complete the session by Vijay. So keep noting your questions or keep messaging your questions so that our team will collate and put it across. So let me take the privilege of again inviting a great professional like Vijay to the forum with a vast experience in the investment management sector under asset management. He worked with SBI, L&T and all earlier, and he has been spearheading Kerala operations, Kerala business for the last couple of years, 4 years. So with all warm welcome, Vijay, for this today's program, and I'm sure our audience will be immensely rich with your experience and expertise. Thank you.
Thank you, sir, for that introduction. I'll just share my slide. I hope my slide is visible and I'm audible.
It's just coming up. Yeah, it has come up well. Yeah.
Right. So thanks. A pretty insightful session which was taken over. So in fact, many of things that I am going to cover would be an overlap with what Gibi sir has already covered. Right. So let me just proceed with that. Yeah. Any guesses what this slide shows? In fact, it was supposed to be a surprise, but I think it's already been covered. But just wanted to see any responses in that. Any guesses what this shows actually?
So there are responses of GDP, SIP.
Perfect. Okay, so this is actually India's nominal GDP growth, and what we have taken over here is basically 92-93 because it's a very critical year for all of us, right? That is when the Indian economy got opened up, and we saw India's trajectory changing, which you've already seen it from the slide which Gibi sir has shown, right? This is India's nominal GDP growth. Similarly, if you look at it, right, if you're looking at the sales of NSE listed companies, you can see the kind of growth that is happening, right? All the graphs I'm going to show over here shows the growth, the positive growth. Similarly, the profit after tax of NSE listed companies, right, from 2003 to 2024-25, you can see the kind of growth that Indian companies have been doing it. And it has also resulted in the market cap growth, right? From hardly around 25 lakh crores, right, of market cap in 2004. Now we are sitting at nearly 500 lakh crores of market cap in this. And this is also looking at a projected GDP growth, right? From the current levels of around 400 lakh crores of Indian rupees, we are projected to grow to around 600 lakh crores. So we are supposed to become a extremely large growth engine, right? So we're looking at that kind of growth by 29-30. Now, why does this happen? And why has this happened is typically because of our population, right? So remember a time when in our school days, we were told that, in fact, in all my school days, we were told that, India's population is the biggest issue for us, right? We need to control population. There were a lot of activities, a lot of things which were done. In fact, if you went by a highway, you used to have this trucks which had this thing saying that, our two, we two, our two, have only one child. That was a kind of focus that we had because we felt population was a bane for India, right? because we were supposed to be a poor country. A poor country, what happens is that a lot of focus on the government side moves towards providing subsidies for the welfare, which is the government's job. The government's job is to provide welfare to all its citizens. And when you have a country with a lot of poor people, a lot of money went into that. A lot of focus on the government side went into that. Now imagine a situation where the population, which was supposed to be a bane, has become the boon now. Right. So now just imagine a situation now ki India, if you're looking at it, has become the most populous country, right? 140 billion is the population that you have. And when we look at it, the most positive part is that we are having the highest amount of working age population. The average age of Indians is becoming around 28 years. Now that's the biggest boon for us. But compared to companies, compared to developed countries like a Japan or a US or a China, etc., where they're sitting at in the late 40s, in the mid 40s, or in the early 40s, respectively, for countries. Now, what happens is that when you have a highest working age population, they are not dependent upon the government, they're not dependent on everybody, and they're all productive in there now. So if you look at the left side of graph, right, we can actually see how our working age population is going to increase. The next level that we are going to have is also how the economic trend has also moved. Remember when I told you, when we were told that India is a poor country, the earlier, if you look at it, it was like a pyramid that was there, with nearly 50 to 60% of India's population in the lower income or the lower income levels. Right now, currently by 2024, if you look at it, the middle, upper middle, and the affluent would be contributing nearly, if I'm looking at the gray with this thing, it will be contributing nearly 30% of India's population. And move to 2030, right? Middle, upper middle, and affluent is going to become nearly around 60 to 70% of India's population would be that. Now, what happens is that when the population increases, the dependency, right? You have the below poverty line or the lower income population decreases. The government can focus more on infra. The government can focus more on capex, and the spending power increases. For the economy to grow, people should spend, people should earn, people should spend. And as our middle class, upper middle class, and the affluent starts improving, we are going to see a huge traction happening over there. Consumers go premium. Look at this slide. Actually, compared to earlier, right? If you had any election rally, it used to be roti kapda makan. Right? For people who have been well versed in the Hindi thing, it was roti kapda makan. What was the norm that was there for election, right? But that has changed. That has changed because the economic graph has moved across. So in 2010 to present, if you have looked at it, the discretionary spend to non-discretionary already moved. By financial year 30, you're going to see more happening, right? The discretionary spend or things which are not, that is not necessity, is going to become higher and higher. If you look at the auto sales figure, right? Premium vehicles auto sales is increasing by 28%. That is from financial year 21 to 25, it has increased by 28%, whereas mass vehicles or hatchbacks has actually seen a decline in it. Similarly, smartphones compared to the mass phones, and mass phones have seen a decline of 3% in its sales, whereas premium phones that have seen a 65% increase. Even in our basic things, right, what we eat, right? For example, green tea or healthy biscuits. Typically, healthy tends to be expensive also. So if you look at the premium biscuits, has been growing by a significant amount compared to what the plain biscuits have been growing, right? By calendar year 2024, 59% is the volume that premium biscuits has, and plain biscuits has got reduced to 41. And believe me, as the time goes by, as our incomes increase, it is going to get further and further skewed towards the premiumness. Hotels, right? If you see premium hotels, the growth has been 37% compared to economy hotels only growing by 9%. And the other part with regards to AC, that's something as basic as that, right? Train travel, as AC train travel is increasing by 12%, whereas non-AC train travel is seeing a decline in this. This basically shows how the income, income has been growing. What does that result in? India has been growing at a very significant pace, and it's one of the fastest growing economies in the world, right? So if you compare it with many of the developing countries or the emerging countries, we are going one of the fastest, right? We're looking at a 6.2% kind of growth that is happening. And as you look at it, right, by 2030, the prediction is that we will be becoming the third largest economy with a $6.8 trillion economy. We will be behind China and US, which they're quite a way ahead. And hopefully we should be reaching out to them in a few decades time. So why has this happened? It's very important that we know why has this happened, right? So one is that government, you're seeing a lot of infra projects happening. So people who visit India more often would actually can actually see the infra projects happening much more. One is a kind of highway growth happening, right? It has been a 3.8x growth that has happened in the highway from 1998. The thermal power capacity for people in Kerala, you can actually remember the days when we used to have this power cuts on regular basis, right? And come to a situation where there are no power cuts happening, right? And which is happening all across India, right? In fact, the power generation, etc., is going much higher. There's a lot of money being spent on the infrastructure projects that we look at it. Next is also removing of the monopolies which is happening, right? Be it from the city gas distribution, the airports, the Vande Bharats in the railway network, and the defense, commercial coal mining, etc. There is the monopoly is being removed, and you're also seeing private participation happening in the country. Now, where does that result? All that results in the growth. One you have seen the GDP growth. The GDP is growing at around 11.6% from 2010 till now. In similar way, if you look at it, the profit after tax for the Nifty companies has been going at 11.7, and what has that resulted in? Market cap, or where the money has been put across, has been seeing a 13.9% growth from 2010 period, right? So this is about India, right? India is, in fact, if you look at it, the next 10-15 years can be considered as the golden period for India, right? So what is the economy? What is the markets currently? Right. So if you look at the last 1.5 years, the markets have been extremely volatile. So post-COVID, we saw an extremely good rally. But if you look at the last 1.5 years, post-September 2024, actually the markets have been so and so. It's been extremely volatile. So Nifty 50 has only given an 8% return, whereas small caps have taken a hit. What are the sectors that have good last 1 year? You have seen metals, bank stocks, auto, oil and gas, which have done good, and IT, the defensive sectors, have actually gone down in that segment. If you are comparing India vis-a-vis the global markets, right, Korea, Greece, Taiwan have done really good, whereas Indian markets, the Nifty 500, the broad index, has actually given only a 1% return vis-a-vis this. So this is a past one. So you have had one, India has underperformed the global markets in the last 1 year. The other important part is that even if you look at currency-wise, right, Indian rupee has actually depreciated vis-a-vis other currencies. So there are two important parts. One, Indian markets have corrected, and a second part, Indian currencies have also corrected. It is a scenario wherein India becomes a beautiful contra bet, right? Because if you look at from an outside market for an FII or something, you're looking at a market where it has underperformed for the last 1.5-2 years, and structurally it's a beautiful market to be in, and even the currency is also is undervalued. This is a beautiful scenario for people to come into the markets, right? And if you're looking at the PE, if you're looking at the kind of a volatility, so Indian markets till 2024 were extremely overvalued, right? Compared to that, right, if you're looking at the PE premium to the emerging markets, we are looking at an average of 71%, but currently it is trading at 35%. So it has come well below its average. Similarly, if you're comparing it with the all country world index also, then it's that part. 30% was the average. Compared to that, it's currently sitting at 5%. So that PE premium that was there, that extremely high valuation, has actually come down for the Indian markets. And next, the main part with regards to the earnings, right? Because markets don't make money. It is companies which make money, right? Companies have more profit, and that results in their stock price going up, and that should be the focus on that. So if you look at it from 2024 onwards, if you look at it, the market's profit, the profit after tax, has also been growing at a significant level in this. Now, from the government side, there's been a lot of push for the push towards for the economy, and it has continued with this year budget also. So this year budget also, we have seen a lot of money being spent on the capital expenditure that is there, be it towards the highways, be it towards railway, be it towards schemes which help in the manufacturing sector or the services sector in this. So what have been the growth measures from the government side? One, we have seen the income tax reform, the GST cut, right? So the previous budget, the one previous to this budget, we had seen the income tax being cut to 12 lakhs. So when people have seen 12 lakhs, till 12 lakhs income tax not to be paid, you're going to see consumption also improving a lot. We also see GST cuts happening in a lot of parameters. We have seen also the economy moving in that way. We have seen a monetary policy. RBI has cut the rates and has been cutting the rates. It's been a very accommodative monetary policy, and there has been a lot of simulation which has come from the government side. A lot of relaxation with regards to government side to push for manufacturing, right? To make India into a manufacturing hub. Because already services side, we are way ahead of the competition. We are way ahead of other countries. Manufacturing is something which we lacked, which China was really good at. Now that China is reducing it, it's an opportunity for India to grow. And from the government side, there's a lot of push happening to make India a manufacturing hub. So having said that, what are the tailwinds? So what are the problems that we can face, and what are the headwinds that we have, and what are tailwinds? One, the tailwinds, what are the positives that we have? Like I mentioned, you have seen the 8th pay commission coming in. So that's going to be a lot of liquidity into the market, right? That's going to come in. We're going to see 3.7 trillion rupees coming into the market, which is nearly 1% of GDP, which is going to result in a lot of urban demand coming in. There's a lot of consumption aid which will come in because of that, because of the GST cut also is going to come in. RBI side, there has been a rate cuts happening, rates happening on the lower side, which will also help the liquidity. We have solid macros, right? When from post-COVID, we have seen countries having high inflation levels, etc. We have had inflation under control and lower oil dependence, right? In fact, it has always been India first policy. Wherever we have found cheaper crude, we have gone towards that, right? Rising service export, etc. is the positive that we have. And the capital expenditure from the government side, right? Post-election also, we have seen huge amount of capex happening. So these are the positives which are there for the Indian economy. What are the negatives that are there, or what are the challenges that India face? One is the US tariff, like you all know. One is because of the uncertainty that is there about how will the tariffs flow across. Then you have the geopolitical tensions. You have the Russia-Ukraine, which has been going on for the last 4 years. You also have the US-Iran issue. You have the US-Venezuela issue. You have the India-Pakistan issue. You have the US-China issue that's going on. So all these are headwinds or the challenges that will be there. Then, like I mentioned, the rising global debt, which will also there in this. So where do we see in the current market scenario, where do we see the pockets of growth? See, one, what we are expecting is that India incorporation, typically India will be growing at 10 to 12%. If you're looking at real growth, the GDP growth would be around 6 to 7% and plus inflation. So 10 to 12% is what India will be growing at, right? That is something which is going to happen. What is our stance currently? What are we overweight on? So we are overweight on private sector banks. We are overweight on the asset management companies, on insurance, because like in fact one of the slides with Mr. Gibi had also mentioned, right? There's a demand happening for the financial services, right? People are moving in towards the financial services. There's a demand for life insurance. There's a demand for mutual funds, PMSs, etc. coming in. So we are bullish on that sector. We are also bullish on capex driven sector, because in the government side, there's a lot of push on the capital expenditure. So industrials, manufacturing, utilities, etc., metals and mining is what we are bullish on. What are we underweight on? Currently, we are underweight on defensives, and also we are underweight on information technology, because like we have been hearing for the last for the last 6 months to 8 months, there's a lot of IT is under pressure, right? And with AI coming in, there's also a lot of uncertainty that is there. Avenues to invest, I think Gibi already covered, but I'll also give you a view about it. So one, for NRIs, you have the mutual funds, right? In mutual funds, there's an array of products, right? You have the equity, debt, and hybrid products. You have ETFs. You have the fund of funds, specialized investments. You have then you have in the alternate space for a mature customer, right? Once you build up a portfolio, 3 to 4 crores, 5 crores from a portfolio, that is when you move towards the next set of things. When you want to get into the exclusive things, that is where alternates come in. So you have portfolio management services, alternative investments, private equity, debt, real estate, and you also have the Gift City product that you have in this. To give you a return, right? Before I move towards my products, so what I'll cover is also a base set of products that people should be looking into. This is what asset classes have given return from 2008, right? So if you look at it, it's pretty interesting that you find some years equity, BSE Census has given positive return. Some years gold has given positive returns. So if you look at from 2013 onwards, gold underperformed in 2018. 5 years of total underperformance, but in the last 1-2 years, gold has given phenomenal return in this category. So what happens is that, right, at every point of time, some or the other asset classes come into importance. So when you do your asset allocation, which I'm pretty sure Trinity will be doing it for you, you also have something called as hybrid funds. So if you are a beginner, if you're just starting off your investment journey into mutual funds, the one category that we recommend is hybrid funds, right? It's a beautiful category because it reduces the risk. So to give you an example, September 2024 to to March 2025, where the markets corrected, where the equity markets corrected, Nifty 50 fell down by nearly 16%. Now, some of our hybrid funds, equity and debt, one of our flagship hybrid fund, only fell by 11.4%, whereas Nifty 50 fell by 15.8. Multi-asset fund fell by only 5%, and balance advantage fell by only 6.46. So what happens is that hybrid funds, they typically tend to fall lesser than compared to the market. They are less volatile. And in many a situation, sometimes if you don't fall much, that will also result in alpha creation in your portfolio. To give you an example of it, I will just briefly cover multi-asset fund, one of the funds that we are recommending currently. It's a fund which invests into equity, debt, and commodities. When I see commodities, we have a choice of going between gold ETF, silver. We can go into commodities like copper, aluminum. We can take futures. We can also invest into REITs, invest ITs. We can also invest into crudes, right? That is the kind of fund the fund it does into that. How has the fund performance been? So this is a pretty old fund. It was launched in 2002. Since inception, it has given 20.8% CAGR return, right? Compared to the benchmark, which has given 16.7% CAGR return, it has outperformed the benchmark by 4.1%. It is a hybrid fund. It is a less aggressive fund compared to a pure equity fund. To give you an example, so in case you would have invested into this scheme in the inception period, right? 10 lakhs invested in 2002 would have become 7.7 crores now. So that's the beauty of multi-asset, right? Because markets go up and down, and the fund can move between debt, equity. Because if you saw the previous slide, right, at some point of time, some asset class will be doing good. If equity is doing bad, gold does good. If gold is doing bad, equity does good. If both are doing bad, you have debt, which is there as an asset class, right? 21% CAGR return over the last 23 years, which is a beautiful return that has happened. 10 lakhs invested would have become 7.7 crores, whereas if the same amount in Nifty 50 would have been 3.5 crores at that point of time. The other part that we want to speak about, right, is SIP. When we speak about SIP, people typically think, right, why equity? Why SIP, right? But in the wealth creation journey, I believe that there's no better tool than a simple SIP that is there, right? So in like the slide mentions, you have a don't worry period, you have a be happy period, and you aim to get a wealthier period. So in SIP, what is a don't worry period? It is 0 to 5 years. Right, and you have 6 to 10 years period when you will be happy, and then 10th year onwards where you will be extremely happy, right? Because 0 to 5 years, what happens is that typically you don't see that wealth creation happening. You have been investing money month on month. So SIP is nothing but systematic investment plan wherein you can put your money on a monthly or a weekly basis by giving a pre-existing mandate which can come in. That's the best way to come into the markets, right? So to give you an example, this is actually for the ICICI Prudential Value Discovery Fund. Actual data, right? When we're looking at a real life scenario, right? So in the first year, this fund was launched on 2004. First year, if you invested 10,000 rupees per month, your total amount would have been 1,20,000 rupees. By the end of first year, it becomes 1.51 lakhs. 3 years, you would have invested 3.6 lakh rupees, and the value would have been 5.63, right? You're looking at 31.47 XARR, because this was a period from 2004 to 2008 period where you saw a lot of infra push happening and the markets were rallying. Then came the fourth year, that is 2008. Any guesses what happened in 2008? In 2008, where the market, your investment value would have been 4,80,000 rupees. The cost would have been 4,80,000, but it took a huge dip, and your value of investment came down to 3.67 lakhs.
Yeah, Gino has written recession, Unnit has written bank crisis.
Perfect, right? You had the subprime crisis, the depression that we saw. So another guess. Now just imagine 5 years. What do you think this amount would be? You saw in 3 years period, the value increased to 5.63. 3.6 lakhs of investment moved to 5.63 lakhs. And the fourth year, everything went down. You saw markets correcting big time globally. Your investment was 4,80,000, but the value of investment came down to 3.67. Now in the fifth year, any guesses what the value of investment would be?
Someone answered 8 lakh?
8 lakhs. Any other guesses?
Nothing so far.
Okay. The 5th year, the valuation would be 10 lakh 11,000. This is the actual returns, right? So in 2009, there was a rally which happened, the similar amount. Just imagine this part, right? From 3.67 1 year. And the beauty of SIP is that because you will be investing, you'll be cutting down your risk and you'll be investing, you'll be accumulating more units when the market is down, right? Now let's go. So this was a don't worry period, right? Don't worry period. And now you have the be happy period. Now this is from the 6th year onwards, right? Again, you're investing 10,000, you're continuing your SIP, right? By the 9th year, your total amount invested is 10 lakh 20,000, and value discovery fund, your fund value would have been 21 lakhs 96,000, right? 10th year, your cost would have been 12 lakhs, and if you're looking at the value of your investment would have become 41 lakh 38,000 with 23.939%. The thing that you have to notice, within a period of 1 year, from the 9th year to the 10th year, you are seeing nearly double the money. The money has nearly doubled in this, right? That's the power of compounding that we are looking at it. And if you would have been remaining in the full journey with ICICI Prudential Value Discovery Fund, right, this would have been the journey. The 21st year, that is now, your current valuation would have been 2.22 lakhs, whereas your investment would have been hardly around 26 lakhs, right? Investing 10,000 per month over 21 years of period, you would have invested around to 25 to 26 lakh rupees, and your current valuation would have been 2.22 crores. Right, that's the beauty of SIP that we just want to highlight. In that, the amount can vary. Just don't go by the 10,000 rupees. It is as per your requirement. Do you want to do a 10 lakh rupee SIP? Do you want to do a 5 lakh? Do you want to do a 1 crore rupee SIP? It totally depends upon what is your risk appetite, what is your goals, and then you have to proceed with it. Right. So now, if you are a mature investor, you have a lot of portfolio. The next set of thing that happens is a portfolio management services, right? Because then you would say that you want to buy stocks yourself. Right, you want to buy stocks in your demat and you want to grow in that. So what is the opening that? So what is the kind of offering that we have? So typically, what is the goal? Right. So if you can see this slide, and I will just show it across. See now, we have basically looked at 5-year period, right? We basically looked at 5-year period, and in the period of 2012, right? So 5-year returns for Nifty 500 would have been -2%. But even in this period, right, you had 77 companies which gave more than 15% CAGR return over 5-year period. So the whole objective of a portfolio management service, the whole objective is basically that we should be able to identify the 77 companies, right, even when the markets are low at that point of time. Now, how does that happen? Right. So typically from our side, we have this screening process, the evaluation selection process that we have. So 2,500 companies is what we basically do the in-house screening in. And out of that, active coverages, it is 620. And this is highest among all AMCs in the country. This is highest among even or majority of the brokerages. So typically people only cover on 350, 400 companies. We cover 620 companies on an active basis. We use something called as a BMV filter, that is a business management and valuation filter, after which it comes down to 170 to 190 companies, and then strategy level filter of 60 to 65. Then we make a portfolio construction for this thing. How has the thing been? So typically, like I mentioned earlier, it is not markets which make money, it is companies which make money. So when you look at the things, right, you should also look at how has the company's profit grown. So in our content, these are a few of our strategies that I mentioned. So contra strategy portfolio, the profit, I'm not looking at the returns, right? The profits of the company has grown over a 4-year period by 20.31%. Pipe strategy, which is a small cap, it has grown by 12.01%. Look at the return on equity also, which has been growing at around 14.8%. How has that resulted in the performance-wise? Contrarian strategy over the last 5 years has given 22.82% CAGR return, whereas the benchmark has given 16.4% return. Pipe strategy, which is a small and mid cap, one of the most aggressive strategies in PMSs which we have, has given 27% over the last 5 years, whereas the benchmark has given 16.44% in this. What is my objective? So when, as a customer, when I'm coming into a portfolio management services, my objective is to make more return than the respective mutual fund. It should at least give 2 to 3% CAGR more. Right, that is the objective, and that is what the strategies have been able to do. So PMSs, once you build your portfolio by 3 to 4 or 4 to 5 crores, you should be looking into PMSs because they give you that extra alpha in this. right? So contrarian, we have the contra fund, which I had mentioned, one of our flagship funds, along with the pipe strategy, which takes a contrarian view. And like I mentioned, India is a beautiful contra play currently. What do we do in this strategy, right? Typically, we focus. So unlike a mutual fund wherein you end up having, let's say around 70, 80, 100 kind of a stocks, in a PMS, what happens is that we basically give you the best stocks, right? We basically look into it. There's a concentration of stock which happens, and of these 100 stocks, we basically come and create a portfolio for you with around 25, 30 companies, right? The best of the stock. So there are two things. One, the risk also increases, but also the potential of the returns also increases. A contrarian strategy, like the name says, it takes a contrarian view. So we basically look at companies which are market cap leaders, which are high growth oriented. We use a BMV filter, etc., and then we identify companies which typically are going through some kind of a bad phase for them, right? Basically, we're looking at companies who are going through special situations. Imagine a telecom sector from 2017 to 2020 when a Jio came into the market. There was total disruption, right? And that point of time, a Bharti Airtel would have been a good buy in that. You had COVID, which came in, which became a pharma sector started doing phenomenally good. And so you have special situations which come in. Contrarian fund invests into stocks or companies which are going through special situations. It is a market cap agnostic. It can go between large cap, mid, and small cap. I already show the returns also in that, right? So this is the portfolio which we have for the contrarian strategy currently. Like I mentioned over here, we are bullish towards the private banks. We are bullish towards ferrous metals. We are bullish towards retailing. We are basically bullish about consumption also, and also companies which benefit from the capex push which is happening from the government side. I'll quickly cover the alternate investment funds also. So you have in the CAT3 basically in equity around. You have the growth leaders fund, etc. So again, look at the I'll quickly run through this, which is moving across, right? We have alpha opportunities and smart fund basically, which have been giving profit after, if you're looking at the portfolio basis, alpha opportunities has been given a 20.05% of profit after tax growth. Similarly for the smart advantage fund also, which has been there in this. I'll move to the interesting part, right? When people think of investing into debt, right? I've seen a lot of people putting money into corporate societies. I've seen a lot of people taking risk by investing into bonds. Now, imagine you have a situation, in fact, Mr. Gibi had actually also mentioned it in that you have a space, right? A corporate credit opportunity space, a fund which helps you play the private credit part. So what is the space that so we have something called the corporate credit opportunities fund series 3, which is currently running. Where do we hit? Right? We basically look at a gross yield of around 12 to 16%. So we basically enter into a field wherein banks don't enter. So if you look at it, if there is a private equity or if you want a merger and acquisition, typically that is where the banks don't enter. That is where we come in. And the mid-yield segment, 12 to 16% is the yield that we are looking into it. What is the guarantee? 20% of the money that is being put, we will be putting, ICICI Prudential will be putting their own money in this. It is a pure debt fund. This will be a 4 plus 2 years kind of a period that is there. Your expectation should be a post-tax return of around 10 to 11%. A debt instrument, right? A debt instrument in this. Instead of investing money directly by buying bonds, etc., coming into a corporate credit opportunities fund, into the private credit field, it gives you the benefit of having a fund manager manage it. It also gives you the benefit that ICICI Prudential Asset Management Company, with our research team, with our fund manager experience, we will be able to identify good quality companies also, right? So this is one option that we have in the debt side. Another side that you have is in the real estate side, right? People buying real estate, in fact, Mr. GB had also told about this, about, people get emotional about real estate. I have seen people buying real estate emotionally, trying to build commercial properties. I have seen properties lying, people buying farmlands, people buying properties, plantations, and then not being able to maintain it. Especially NRIs, I have seen that happening, right? You buy properties and then it remains idle. And in a market like Kerala, last 8 to 9 years, we have not seen the real estate market moving up, right? Unlike many other locations like a Bangalore or a Pune, etc., because we are seeing a population growth happening. And basically these tier 1 cities like a Bangalore, you have a Hyderabad, you have a Pune, you have a Gurgaon, which is driving India's growth. Now, if I want to have an asset allocation, if I'm looking at real estate, where would I look at? Right? Where would I be looking at? So typically I would be wanting to invest into a Bangalore, into a Hyderabad or a Gurgaon, because in Cochin, a rental yield for a commercial property is going at somewhere in the range of 3 to 4%. That's it. Right? Imagine 3 to 4% is a rental yield that you get from a commercial property, and residential properties are hardly having a rental yield of around 1.5 to 2%. And post that, if you get the taxation also down, then you are even without taxation, you're not beating inflation, and with taxation, you further don't. Whereas if you go into the tier 1 cities, right, for example, Bangalore, Pune, etc., you end up getting 8.5 to 9%, 8 to 9% kind of rental yield that is possible. And so if you're looking at real estate, we would prefer to look at properties in Pune, Bangalore, etc. But how do you do that? See, when typically you always look at properties where you can see, where you have relatives, and when you know the area. But for majority of the people, they are not accessible to the tier 1 cities. That is when ICICI Prudential comes in. So we have something called as an office yield optimizer series 2, which is running, with which you get a benefit. With your just 1 crore of rupees, you get a benefit of taking prime properties in tier 1 cities. Right? That is the office yield optimizer. This is the properties that we have. So the office 2, that is 2021 or 24 onwards, which is currently running. We have taken the properties in Pune. That's the right hand side. You can see in Magarpata, Pune, in Kanchanjunga, Mumbai, Whitefield. Who are the tenants that we have? We have Capgemini in the Pune in our Pune property. We have the Mirai Group in the Mumbai property. We have Atos in the Bangalore property. Right. So this is the kind of thing. These are kind of tenants that you can also get it. Again, with the 1 crore rupees, you are able to get a real estate exposure. This is a 5+2 kind of thing. So what happens is that we basically buy a special purpose vehicle is created, and you get to buy property. We look at creating a portfolio of around 4 to 5 buildings which we buy. The rental yields will not be given on that basis because that will attract higher taxation. What we do is that we also take a loan parallelly so that the EMI matches with the EMI that you are paying for the loan matches with the rental yield, so that it becomes tax efficient also. Post-tax, the return expectation can be from around 10 to 12%. This is also an option that you get from the alternative investment fund, right? So that's the kind of options that you have in this. I'll quickly cover Gift City, right? A lot of time taken. Like Gibi sir told, you have an option of investing in the Gift City. Now, suppose that you don't have a PAN card in India, right? But you want to invest into India because, like I mentioned, India is the fastest growing economy and India will grow fast. If you want to invest, you have a Gift City model, right? So we have a product called a Smart Navigator Fund, which basically invests into ICICI Prudential sectoral funds, right? Instead of you taking a call about, let's finding, okay, today we are speaking about banking doing good, tomorrow you're going to see an energy sector doing good. Instead of you moving it across, we'll have fund managers who will do that job, which makes it much more tax efficient in that thing, right? So what is the importance of Gift City? First of all, no PAN required, no tax filing required. It is done in USD basis. It is not on the INR basis. What are you being, the taxation would be the home country taxation, and it is well regulated, right? These are the benefits that you get by investing into the Gift City model. Also, we have the Smart Navigator Fund, which will be a diversified equity fund. We'll be investing into thematic funds or sectoral funds of ICICI Prudential Asset Management Company, which will be taking that call, right? That is what we wanted to cover in this. The presentation has been quite elaborate. I would be more than happy to answer any questions if there are in this, right? I hope we have been able to cover across many sectors in that.
I think Vijay, wonderfully in the last 40 minutes or so, there are so many areas you covered: global, Indian, and then sectoral investment avenues. This is session intended actually to give a larger perspective to the audience, not to pinpoint on any particular. That is why, if you look at it much more with the full details of probably not able to share it in each of the product, but largely I'm sure the audience would have got a fair idea that what are areas where we can find from the NRI community to invest
Sure.
in India. Yeah. So there are a couple of questions come up. So maybe Aina, would you like to take some of it, or you want me to?
Yeah. So now we are open for questions. We already have few in the chat box, so I'll just say one by one. So one from Raghunath sir: PPF already started, can be continued. How to transfer the PF account from one bank to another? GB sir, you're on mute.
Yeah. So PPF account, let me check that whether that is possible to continue as an NRI. As an NRI, you're not supposed to keep it. So in my view, that whether to continue that, we will have to just check the regulation and the tax expert advice. We will get back to you personally on this. As a standard practice, NRIs are not permitted to invest into PPF.
Yeah. So next question from Mohan sir. During RNR status, understand that all NRI FDs must be converted to domestic deposits and will become taxable. But in case of FCNR deposits, the interest is not taxable. Can you confirm this? What
Yeah.
about currency value appreciation? Is it taxable?
So with my experience in banking, RNOR, you don't have to convert the NRE deposit into domestic deposit and does not attract tax for 3 years maximum time. So there is a time is also given. Same is the case with the FCNR deposits also. If NRI is back to home country and loses his NRI status subsequently, 3 year on an average, you can maintain that deposit without having a tax implication. And currency appreciation, I have not understood that whether you will be, I'm assuming that you're talking in terms of FCNR. Whatever is the interest charged only, you will have to pay, not on the currency appreciation, because that is a deposit naturally gets transferred into rupee at the time of redemption or at the time of maturity of the deposit. Hence, that there is no capital gain tax comes on currency appreciation per se.
Yeah, hope that answers Mohan sir. Now next
Yeah.
question from
Sorry, can I just have a
Yeah, please, please.
yeah. So you were saying that during the RNOR status, NRI deposits, the interest rates are not taxable. Are you sure, sir? Because my understanding is that NRI deposits are taxable, interests are taxable once you are on RNOR.
Whatever the understanding, that's what I mentioned, the banking and limited understanding, up to 3 years, there is a window available for not having tax. I will check once again, since you have asked this question, and we confirm back.
FCNR is not taxable, but NRI deposits, my understanding is that it's taxable. If you can confirm it, that would be great.
I will do that. And FCNR, definitely there is something called an domestic foreign currency account. It's RFC.
It's RFC, but of course, RFC is nothing. You won't get anything out of it.
Correct. So FCNR thing, domestic thing on RNOR status, I'll check, reconfirm and come back to you.
Please. Thanks.
Okay. So next question from Chaco sir. Is there any options to invest in Gift City investment product from overseas online using overseas bank account? So question to Vijay sir.
Yeah, so you can, typically you should be using it. So we have a product called a Smart Navigator, which I just mentioned, and it is to be done through the overseas account itself, or you can do it to the NRI account. It is to be done through USD, right? Yeah. So in fact, there's one more question which has been there. I'll just take it forward. What is the amount that is required? So for the Gift City product, so there are multiple things which Trinity would be able to help you out in that. The product that we have, the Smart Navigator Fund, it is $150,000 is the minimum ticket size for the product that we have. Right? There are other funds also which have lower ticket size. I think they will take it forward in that.
So
the product that we have is
there are Gift City. Via Gift City, you're able to even invest in other mutual fund product as well with a lower ticket size, which is possible.
Okay, so one question we have from Joyce Joy. Considering all this AI issue, how much IT or IT exposures can keep?
Vijay, if you could
so there are two ways to be looking at it, right? One, very hard to say how much IT exposure should be happening, right? Because if you look at it, you can also look at it as a contra bet, a brilliant contra bet, right? Because IT has been underperforming a lot. But then there's also a big question mark, like, is there a question mark on the existence of companies, right? So how much IT exposure is a big question mark. I would leave it to the fund managers to manage it, right? Because it is very hard to say. So I've been just reading a few articles, and some people are also comparing it to a telecom thing, right? If you remember, in 2008-9, companies like Nokia, companies like Motorola, BlackBerry were being valued at $150 billion, right? And then 2008, Apple came, right, with the iPhone thing. And within 5 years, you had a Nokia selling its business for $2 billion, right? From 150 billion valuation, it came to 2 billion. So not to say about, we don't know what this thing is, right? I as a layman don't know about it. So what we would prefer it is that leave it off to the fund manager to manage it. If you have the risk appetite, it can be a good contra bet. Now, again, the question mark is that which companies in that? How to identify those companies would be the next challenge that you will have buying an individual stock, right? How would typically the easier way, the more risk averse way would be to get into a mutual fund, diversified equity funds, and let the fund manager take the call about which companies to buy. They will do the analysis about which company is better suited or better guided to go through this tough times. Good contra bet, but what is the future is something nobody will be able to predict.
Yeah, that is where the risk associated with a high return. So
Yes.
if you are able to take it, and if it is coming as per the expectation, possibly you will get a big
Yes.
bumper itself.
Okay.
I think Mr. Mohan has asked one more question, that once you come back, how to manage your tax planning. Yes, I don't know whether you notice the slide. Everything is not at a 30% tax. There are investments at a 12.5% tax. There are investment at 20% tax. There are investment also, like typically bank FDs at 30% tax. So definitely our team or can definitely help you in terms of advising, managing this efficiently.
So now it's open question. So if anyone has any other questions you have, kindly ask.
Okay, there is in Gift City Bank, there's a question by Mr. Jinu Thomas. Invest offshore MF using USD account. So could you just elaborate? You're saying invest offshore MF, investing outside India, or what exactly is this? Gibi sir, if you could.
Yeah, so I think that what he's intending, that can we invest into outside Indian funds through Gift City? My answer could be that there are many Indian mutual fund itself in rupee terms facilitate you to invest in outside market like US specific fund, etc. So you don't require to have a Gift City account or an investment to put your money as an NRI or even a domestic citizen to the US and other markets as well.
You also have some outbound funds also in the Gift City. Ours, ICICI Prudential, is an inbound fund, but there are other people who also do outbound funds, and you can also invest into that.
Yeah.
There's one question.
Yes, there
from
are.
Sir. Yeah. Is it possible to do SIP through Gift City?
Yeah.
Okay,
Yeah.
so with regards to our product, no, that option is not there with regards to do SIP through Gift City. You can see Gift City is a mode through which you can come into market, and there will be a lot of limited kind of products that are there, right? One is a smart navigator fund. Similarly, you will find other fund houses. The Indian markets are open. You can very well invest into mutual funds, right? You can very well invest into PMS, alternates, etc. And in that mode, you can invest into SIPs, no doubt about it. In Gift City mode, unfortunately for us, it is not there.
Yeah, like
And there'll always be
SIPs, I don't think there is any fund facilitate, but in under AIF itself, there are structured. You can call it as a SIP or STP. There are monthly, quarterly, etc. You can come in and invest via Gift City into alternatives, and also you can even come as an NRI with rupee, like Vijay mentioned. 500 rupees to 5 crore a month, you can have SIP going in rupee. There is no limitation. Jinu, I hope this is addressed, Mr. Jinu Thomas. I think this is addressed for you in terms of SIP. Yeah.
So I'll just take one question that which is regards to ICICI Prudential Mutual Fund Gift City entry load and exit load. Typically, it is similar to a mutual fund. 1 year you'll have a 1% exit load, and less than 1 year you will not be having that. That's the kind of entry load, exit load that is there.
Yeah.
There's a question from Paul, sir. Risk on FCNR in USD.
Pardon me, what is that?
Risk on FCNR in USD.
USD, okay. The FCNR is like any other deposit. I mean, as you know, that there is a fixed coupon return is given. And the risk is actually conversion. If at all you want to convert at the time of maturity to rupee. So that time, if rupee is depreciating, which means you will get more. If rupee is appreciating, which very unlikely, then you will get less. So in my mind is there is no risk as such on the currency, but if you are converting that into a rupee, at that point in time, whatever prevailing dollar to rupee rate will apply to you, and rupee likely to have depreciating only in the trend what we have seen. So you tend to get the interest rate plus the exchange rate benefit if at all you plan to convert that into rupee. If you are taking that amount back to any of the foreign country, then that country's exchange rate would be applicable at the time of maturity. I hope I could answer. Yeah.
Yeah. So one more question from Ramesh sir. That is gift city tax benefits. If we can elaborate on it.
Yeah. So the tax benefit is that you're not taxed in India, right? So whatever is your tax in your home country, that happens. So let's say you are from the GCC countries, right, Dubai and others, then the taxation happens. There's no capital gains over there, so you do not pay any tax. That's a benefit that you get. So benefits with gift city is one, the taxation part, because it is as per your home country. If it is US, then it will be the US the taxation, etc. The other taxation is that, for example, many people may not have PAN, right? PAN may not be there. They can also invest it. But whereas if you're investing into mutual funds or into PMS alternates, you require PAN. Whereas gift city route, you need not require PAN also, right? You don't require an Indian account. You can also route that through. It's a USD base. You can use your foreign bank account also to do it. Whereas MF route, you need an Indian bank account to do that. That's the kind of benefit that you get in this.
Yeah. So before we move on to the next question, please note that we have shared a feedback form in the chat, and I kindly request all participants to fill it out and share a valuable feedback on it. Thank you. And then one last question we have is, do you consider ULIP, which has life cover and market linked, is a better investment?
So let me attempt to that, and then Vijay can add. Our view is that ULIP is different. Term insurance is different, investment is different. Always keep insurance separate, investment separate. I don't want to, we also work with an insurance company, but we don't want to come as this thing. Well, I'll tell you the advantage of having it separated. That is more easier. So term insurance, if you take it it will cover you till your death. ULIPs typically cover only till the time where you pay the premium. The PPT is called premium paying time. Only then, till then, you are covered and to maximum of 10 times of your first premium. And after that, your insurance stops and your investment only takes over. Second, unlike other investment, you cannot do a switch in between, reviews in between, etc. So thereby, as an investment, if you consider, why to add this short period of life insurance into it, and also restrict yourself from managing your fund more efficiently or time-bound review, etc., will miss in ULIP, but it is applicable in mutual funds or PMS or AIF, etc. And ULIP has a fixed lock-in period, wherein which other investments should not ideally have a lock-in period, but there could be an exit lot, which ULIP is by law, it is restricted for 5 years. So our basic advice would be to separate insurance completely different and investment completely different. So don't mix it. Yeah, Vijay, if anything, Vijay want to comment.
I mean, I agree. So, I'm not on commentary part of how have I done. I have kept my thing. See, another part that is there, one is liquidity, because mutual funds typically offer you far better liquidity than a ULIP product or any insurance product as an investment thing. And the other part is that, see, when I'm looking at a risk cover, right, typically, right, how do you do that? You're supposed to get at least 20 times, bare minimum of 20 times of your annual income as coverage. Now, what happens in majority of the ULIPs is that the coverage becomes very less. There's no use of you getting a 50 lakhs, 60 lakhs kind of a cover, right? For a bare minimum person, maybe a 25-year-old, unless and until he or she gets a 3 lakh, 4 crores of cover, it's not worth it. And in a ULIP to get a 3 or 4 crore of cover, I think you'll have to end up having a policy of around 70, 80, 90 lakhs, right? 50 lakhs. That's a catch in that. right? So if you're keeping that separate, you take a term insurance, a 25-year-old just needs to pay around how much, 25,000 rupees to get a 3 to
Yes.
4 crore of cover, and then use the rest of the money. I'm saying annual premium, right? Just put 25,000 rupees, and lifelong he only needs to pay that amount till he's 60, 70, till time he wants to do it. And the rest of the money you invest into mutual funds, PMS, alternates, etc. It becomes that's a much more efficient way of doing investments.
Yeah. I think time also up, Aina. We should conclude it, and then remaining whatever questions are there, they can message it, mail it, and we will answer it one-to-one.
Okay then. So we would like to sincerely thank GB sir and Vijay sir for such a beautifully explained session, and I hope each and every one of you found the session helpful and informative. Lastly, I would also like to thank everyone here for your time and presence over past 1 hour. And I will also also add number and email ID of ours. So if any one of you have any queries or doubts, you can just message us over there.
Yeah.
Yeah.
Thank you, Vijay, for your time spent on a Saturday evening. And thank you, each of you, and Aina for beautifully anchoring the session, and the team for coordinating brilliantly. Thank you. Thank you, Vijay.
Thank you.